Hello, 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 all my wonderful, fabulous people who tune in. I appreciate every one of you so much. How is everyone doing surviving the Chop Fest? The Chop Fest and preparing for non-farm payrolls tomorrow. George beating Patrick in. Patrick, did hell freeze over up there in Minnesota? What happened? Does the market have to open tomorrow? What are you over, George? What? It's just range bound. You don't have to trade. Remember, you wait for the setups. Wait for the good setups. If you have a good setups within a range bound market, trade them. Been a major support just above that 3,800 level in the S&P. Boy, if that breaks, woo, it's gonna be a doozy. Hey, Patrick, there you go. Second fiddle to George this afternoon. Hey, Daniel, good evening. Anissa, Liverpool. Government going to force us into crypto. Government's going to force us into crypto. No, the government would force us into the central bank digital currency. Evening, Charles. Good afternoon, Jacob. I don't always buy the dip, but when I do, it keeps on dipping. That's a good one, Ted. Good evening, Connor. Hello, Options 22. We'll bring on Bob in a second. Don't forget Bob's here, Royal Palms. Good afternoon. A weekend after Bob's done. I placed entries 2 weeks ago and nothing has happened. Well, sometimes that's the market. Nothing's happened. Sort of like electing Speaker of the House. Nothing's happened. How many times can the 3820 level hold in the ES? It can hold until it breaks. Then watch out. Hey, Rod, thanks for being here. Waiting for the daily QQQ to double bottom from Daniel. All right, we'll get to Bob in 1 second. As of today, as we went over earlier, the unemployment numbers, and then we had the Fed speaky. The only other thing after the live stream today, besides the crude numbers, and Bullard speaking, was the S&P Global Composite PMI coming in at 45, little better than forecast and consensus, but down from previous. And Global Services PMI, again, slightly better than forecast, but down from previous. And we had pretty much a down market tomorrow. Big news tomorrow. We'll get Bob's thoughts on non-farm payrolls. Last non-farm payroll before the Feb 1st rate hike decision. So again, get Bob's take on that. Then we have at 9 after the open, the ISM non-manufacturing PMI, which is still expected to be in expansion but down from previous. So, and then we have Fed speak. Looks like we have 4 on deck tomorrow, or really Bostic twice. So 3 on deck. 3 on deck. So busy day tomorrow, but 1 hour before the open, non-farm payrolls, very, very important number. Today, mega caps taken. Microsoft continuing its decline. Apple pulling back a bit. Google declining its decline. Amazon reversing its bounce. Tesla back down 290 basis points. Energy was the only really thing that was strong today. There's some agriculture stuff and some steel and industrials, but it really was energy leading it. You can see that in the sector. Energy up 129 basis points. The big loser was real estate, followed by technology down 208 basis points. It's actually surprised the utilities hit it so hard with the quick little revert bounce back in the 10-year. Fed watch 61% for the 25 basis points, 39% for the 50 basis point. Again, we'll get Bob's take on any Fed speak, and right on the verge of popping next back to neutral mode, working off some of this fear mode by this sideways movement. All right, remember there was nothing earnings really this afternoon and nothing tomorrow morning, so we don't need to focus on that. And, I still had the yield curve up. The yield curve, the 10-2s, All right, but here's your overall thing. Still in consolidation. Didn't even take out 2 days ago low. So we're still at inside data 2 days ago. Let's hear what Bob has to say. Let's see. Hold on. Is anybody else here? Is non-farm payrolls going to be interestingly up? Well, I want Bob's take. Bob, you are on because we need your expert opinion on everything going on. We've had Fed speak. We're going into non-farm payrolls. The 25 basis points was dialed back a bit, the odds of that, but then bouncing back throughout the day a bit. Help us make sense of all this.
Well, number one, I think payrolls will probably be strong, but I would say only mildly strong. And the only reason I say that is because of looking at some of the data, none of this data is surprising. The stuff that has been weak got a little weaker. The stuff that has been strong got a little stronger. Housing is really the weakest in terms of surprising to the downside. Everything else is either as expected or surprising to the upside. You got contraction on some of the.
And he froze. Why is Bob freezing so much? Oh, I guess we are having a problem again. So, let me try to reset this while he's waiting to get back in. There we go. Resetting the interview link. There we go. Let's see if he can jump in again. I don't know why. Let me just double check, make sure. Yeah, I'm on the good internet. Everything looks good here. Well, I'm waiting for him to jump back in. So, again, still caught in the range. This 38.07 going into tomorrow. You can see the short term was as who put that in the chat? The 38.20 Sterling did 38.20. Again, that's been every little dip in this 38.20 area is getting bought into right in here. But the real line in the sand is at 3,800. That 3,800, we start breaking down below that, and then it's not going to be looking good. So let's bring Bob back on.
I disconnected everything that was attached to my Wi-Fi now. We'll see if that works. If it doesn't work, I give up again. But if there's any, why don't we just go to questions before we? Is there any questions other than
any thoughts on how non-farm payroll and average weekly hours worked affect each other? Payrolls up, but hours down.
Well, it's not a week-to-week relationship, Daniel. That's the thing. It's more of a trend relationship. Hours worked has been up, and wages have still been up. So you want to see those kind of diverge, and if you see those diverge, then you have an idea that wages may be coming down or hours worked may be coming down. We haven't seen any of that yet. But I still maintain that we're going to see it. Jobs are going to come off. You know, there was a lot made today about Amazon letting go of 18,000 people. I mean, they have 1.5 million workers, but still it's their first major layoff. So we're starting to see that fact. And it's not just in tech right now. So what I was mentioning earlier is, you look at like the ISM, the S&P PMIs, for example, in the U.S. Looks like I froze again.
No, you're still here. You're still here, Bob.
That's it. I don't know what the fuck to do about this, so I'm just leaving. I'm done.
Hold on. Let me just 1 second. 1 second. All right. Well, let's see here. Let's see. What is going on? Assign to.
I tried it on my phone. This is on my phone now.
You were still going when you said you were frozen. We could hear all that. Then we could hear you swear in the background. And then you didn't disconnect until you said I give up. So we could
Yeah,
hear all that. You were
that's good to
still
know.
good.
That's good to know. Well, I can't see the chat now. So this is me on my phone. It looks like I'm a little lower, doesn't it? But I propped up my phone as best I could without having it fall down. So we'll see how that
No,
works.
but you both times you were still going. You weren't frozen here. It was just something might be happening on your end. I don't know.
I don't know what the hell is happening. But so to me right now, it looks like I froze again.
No, you're still good.
Your questions, I can't see anything. So if you guys can still see me, I don't know what to do about it.
Huh. I'm going to have to restart
Took his
everything.
ball and went home. So I'm looking at the chat now. So if you guys can still hear me, I can see comments.
We can hear you.
But the last one I see is Connor laughing and Chris laughing, which must have been at my cussing. But right now I'm frozen and you guys are not moving. So if there's anything that needs to go in the chat, otherwise I will effing give up again. Yeah, that's it. What is the difference between guess chat? So Sterling says we can hear you. So why don't we do this? If there's any questions for me, type them in right now, and then I'll just leave you guys alone because I can't see what you're doing. I can't hear what Mike's saying. Mike, I don't know if you can type in the chat, but you could tell Sterling to type it.
Hey, Sterling, I
Jacob
can
says we
see the
can hear you. Yeah, I don't know.
Yeah, everybody says you're there. We
We
hear
hear
you.
you, but on my end, I'm frozen. Am I frozen with my hand in a weird position? That looks weird in the frozen.
You're back, though. Your video's back. It's just
Thanks,
a little
Ted. I
choppy.
love you too. What NFP number are you looking for? So, Connor, I'm looking at wages because that's the thing that Jerome Powell is now regularly commenting on. And so we haven't seen any flexibility in wages, any gap in wages. They've just been strong. They just continue to rise. And the interesting thing about wages is that they actually help real inflation go lower because real inflation is wages, inflation minus wages or inflation minus interest rates, both of which are better than it was, but it doesn't necessarily change what's going on in the overall inflation picture. So it can't really change what the Fed is doing. If we don't start seeing some weakness in wages, that means inflation down the road theoretically will be stronger. So I hope that answers your question. Daniel is saying the iguanas are freezing here, but I'm definitely frozen. So my prediction for non-farm payroll is about 20,000 more than the 2,000 estimate. And I suspect that the markets will go lower. I hope the opposite happens because I'm getting out of this position either late tomorrow or Monday. So I'm either going to be stopped out of it, and that'll be a break-even stop, or I'm going to get out on a rally if it rallies tomorrow. You guys will know that. I can tell Mike, or I can try and get on this thing and not be freezing. So this is just the false promise of technology. Yeah, you might be right, Ted. We need a productivity miracle to fight off inflation, and we're not in a position to have it right now. There's nowhere it can come from. Technology can't move quick enough in the legacy businesses, like for example, a Caterpillar. So, and services technology only helps a little bit. Until AI becomes the thing that replaces people, services are going to stay the way they are. So anyway, I hope I answered your guys' questions. I'm looking to see if there's more. I don't see any more yet. I'll wait a
Can
few
you
more
hear me,
minutes.
Bob?
I don't want to hold you guys up because I can't see what you're doing. Mike may be making comments in the background. I can't hear it.
That's weird.
Mike, can you tell someone to type in what you're saying if I need to know what it is? Because again, I can't hear shit.
Could somebody type in for Bob?
I am frozen
Are
on
you
my
wh-
side
which
here.
which way do you think we'll break out of this range? Hold on, I'm going to text Bob real quick.
Maybe I'll try and come on after non-farm payrolls tomorrow. See if it works. Hey, John A. How are you?
There, I just texted Bob.
Bullard sounds bullish. Hey, Bullard left a little bit of a crack there, but Bostic did not. Bullard actually said that there was room for a pause. But look, the Fed guys all right now consistently are saying that they are not going to cut rates in 2023. Now that can change, but everybody is really betting that it's going to change. We haven't seen that yet. which way do you think we'll break out of this range? So I suspect tomorrow will be an upside break after the first move. But it's really too much to predict. When I say that, I'm talking my long position. The market doesn't act well right now. It just simply does not act well. It just, every opportunity it gets to sell off, it sells off. So technically, I think the downside is more likely, but I'm hoping the upside is more likely.
All
That's
right.
a big number. Amazon to report a loss of $2.3 billion. That's a big number, AB. That'd be a big. Yeah, you guys know what I think. Look, if we break the October lows by about 5%, to me, you start buying that. But I would wait for a bottom to form. So, but if we can break those lows by about 5%, I would be looking for a bottom to start buying. Consumer staples, consumer discretionary, utilities, things that pay dividends, things that are going to lead us out of the recession.
All right. Well,
all right, I'm not seeing anything else. This is
right.
so aggravating for me. You guys have no idea.
Thank you, Bob.
I don't know what the hell is wrong with my connection on this side. Hopefully it gets better.
Yep. Thank you.
I think Mike will probably tell me to run a speed test, but he always forgets that I don't know how to do that.
All right. Well, we will say goodbye to Bob, and I will talk to everyone tomorrow.
All right, Mike, text me if you need me back. I'm going to go. We'll see.
There we go. I'll talk to everyone right now. So, still, can everybody hear me okay? I'll cover thoughts about the US dollar. Let's see. I don't know. I'm going to reset the whole streaming system too to see if there's something on that end. See if there's anything. So we will see what's going on with that. Where do we sit? All right. Can everybody hear me okay? Before I ramble on about nothing to nobody. Is my audio okay? Am I good to go? I don't know why we were having some technical issues with Bob. But, again, let's see. Interesting enough. Let's see. We can hear you. All right. Thank you. I'm clean. All right. Good to go on that. Thanks for that feedback. Just didn't want to mess up the live stream. My system was buffering before Bob came on. All right. It should be good now, though. Audio fine. Everybody can see the mouse moving around, the pointer. I should make a bigger pointer. That pointer's too small. But, all right. Where do we sit? Well, nothing's really changed the S&P besides daily cycles are rolling over in the S&P. Weekly cycles are still at the bottom and not turning up. Rotation back down today, but no major technical damage done since we're still in the range. Again, going in, I'm going to be watching overnight, but this 3820 area is key. We break below that, 3800 to 3807. We kiss that goodbye. We could see major acceleration down even before we hit that low from the 22nd. Why? If you count this just on the daily, let's just go from 3825. 1, 2, 3. This is a combination 4, 5, 6, 7. Look at all the buying pressure here. If this goes, watch out. That's all I have to say. Watch out. This holds. Eventually, it favors an upside break. The thing now, from a pure technical perspective, RSI in the middle, cycles on the daily rolling over, and we're still at the weekly bottom. So it does, and the rotation zone's still down, and we're below key resistance. It still technically slightly favors a downside break, but it has tested it a bunch of times until we actually can get through there. There's a ton. This is some of the most buying pressure I've seen at a level in a while. So all I do know is when you see this much either buying or selling pressure at a key level, if that eventually evaporates and does not hold, everybody who's got stops below here, who's bought any of these dips in since essentially the 20th of December, is now underwater. And that can accelerate very quickly to the downside. So, on an acceleration for non-farm payroll to the downside, the key next level is this 37.55 area, which is the 62.5 harmonic. That's your next key. And when we got the major reversal from CPI Thursday back in November, they just so happen to be the same thing at this point. So that's key, this 37.55. We break below there. Minor will be 37.22. Major will be 36.71. But on a breakdown tomorrow, the key level I'm watching on a closing basis, if we don't reverse any breakdown moves substantially, is 37.55. To the upside, we got to get a little shorter here. A little shorter. We're still at about 38.95, 38.97. Anything else in here, the next lower number is about 38.78. Okay, those are the key little areas though. Let's just go 38.78, 38.79, and 38.95 are my two resistance to the upside. Above there, you still have another breakdown zone. This is where, even on a rally, okay, and we're poised to get out of this. But to the upside, to the downside, you see there's a lot fewer major stopping points. The upside, you got 38.79, 38.95, 39.16, which was the support ledge becoming resistance. And then we're still dealing with 39.33. Now, above 3,900, you should get acceleration to the upside. Why? We're above some key resistance points. The last major stopping point is about 39.16. But you're through the 50, you're through the 21, but you're overall still 39.33 is the major breakdown area. I cannot, until we get a rally and besides an intraday momentum trade, to get into more of a swing trade, I have to get the close. I have to either get momentum plowing through 39.33 and then a close above there, which then would target back to the 200 of 4,007. So I'd be targeting the 4,000 area. So I'd have to structure a reward to risk to target the 4,000 area for any plays that I'd roll into a swing trade. All right, it's not clear sailing. It would just be even to target the 200 to get into there. Why am I reviewing such big levels? Because we could get a massive move tomorrow. I'm leaning towards the downside, but I still need the confirmation break and follow through. However, I can reassess going with overnight price action. In the NASDAQ, this is back to double bottom territory. Does that mean it should favor a reversal? No, because it could get invalidated. But you see here, coming back down to the 87.5 on the short-term harmonics. All we needed to do was get below the 75, but we do have a bigger pattern. Now, if we break below about 10,760 area, you have key support coming in about 10,700, 1017, but below that is a void. You can see here we have the one little tail from Friday the 4th, but the only other thing you got from back at Thursday, you have a void. We could see, and by the way, if you do break down to that extreme, you're invalidating the potential double. So minor is 10,781. Major would be below about 10,7, 710, 715 area. And then I really start focusing on the collapsing play. Now, to the upside, I got to take this level down. First off, around here, which is 10,950. We break up 10,950, 11,000, and then we could see a pretty quick acceleration back up and potentially trigger. Then about 11,143, 11,150. So those will be the levels I am utilizing for the upside. The trigger of the double is the high here, 11,182. Theoretically, it needs, this is sloppy but valid on the 4-hour. Now, if we got major acceleration to the upside, it could be a momentum play on a breakout above that because of the news event, essentially. But if it does not close with at least a 4-hour confirming trigger, it's not a carry forward trade. And it would be better on a daily close. It's against the daily rotation zone just barely. And if you see where the hooking over 50 is, it's right at the first stop reduction target. Also, from a weekly perspective, it's against the weekly rotation zone, but theoretically could take it to the other side of the weekly rotation zone should it trigger. So it is slightly lower probability, but that is the setup to the upside. The major, if we do just go into kaput mode, you're down at 10. You're anywhere 10,450 to 10,500 over the next little bit for a major support. That is your major support. That breaks. I doubt that will break tomorrow, but we'll go over some levels after non-farm payrolls once we see. But we have the upside probabilities mapped out if that does trigger, and we have the downside levels to watch for. Dow, this double, as I said before, is off the table. I'm just using, if it does break to the upside, I'm using 34,150 as stop reduction and 34,350 as a first major target. To the downside, we start breaking below 32.9. I'm targeting about 32.7. And then I'm expecting a retest of the 200, 32,420. And below that, and not tomorrow, but below that, then would be 31,940 area, 31,932. Again, everything's in this friggin' consolidation pattern. Still closing above, just above this 1760. But we break down below that. I'm essentially going to 1730, and then a major breakdown below that is 1711 to 1714. Breakout needs me to get above 1797, and then I'd be targeting the 200 again, 1838. Agreed, Coco. NF non-farm payrolls will decide the direction. That's why we're going over all the key levels. So, and then we got Fed speak tomorrow. I mean, the market's still in some aspects shrugging off the Fed speak, so I think the Fed's just going to keep beating the dead horse. The DAX, watching for a longer-term topping pattern, but if we do break higher above 14,682, my levels are 14,797 and 14,911. If the DAX reverses lower, the key support, first level is about 14,350, and then we got 14,160. The DAX is a lot to chew through for the downside. So, by the way, this is not a double top because of this extended move in here. So that's all my levels. Notes, which filled the gap, which was what I was watching for today. I was a little surprised at the strength of the bounce back pattern. That was after Bullard speaking and things were taken a little bullishly. Or was, yeah. I mean, little dovishly, which I don't understand. They keep beating this into everybody's senses, but the market wants to do what it wants to do. And you saw when I first started this with the yield curve still heading back below. Let's just jump back into that. Yield curve, tens, twos, in major. Finally, I actually like this now. Why? Because we have a really strong potential steepening pattern if this double holds. So this is another thing I'll start watching really after at non-farm payrolls tomorrow, because this could be I'm always keeping an eye out for a substantial bottoming pattern, which that could theoretically, now this could get invalidated tomorrow. Or probably not tomorrow, but over the next week or so if it got more downwards pressure. But if this were to, and I can't use the conservative side yet, just with the aggressive side, look where that takes us. I didn't want to move that line. I just want to put another line here. Look where that takes us. Look at this breakdown area right here. Yes, and technical analysis does work even on the yield curve, but look at the target. That could take us back to only minus, 10. So is that the rapid steepening that could be an uh-oh moment for the market? Yeah, that's why I'm keeping a close eye on that. So what else do we have? What else? We got the dollar index finally getting the close above. We finally got to break to the upside. Unless something really weird happens with non-farm payrolls, we should see follow through up to about this 106 area. But not taking anything for granted yet. We have the weekly cycles not yet at the top. We are slamming into the weekly rotation zone and a major breakdown zone overhead. So for any dollar-related positions, they are getting trailed closely from my perspective. VIX. Inside, nothing. The VIX is just still in consolidation, pretty much dead mode, unless we really start ramping up and getting to trigger this potential double, which is still in play. Crude, we got the crude numbers today. I'm taking this off. This came within a couple right before, and you know what? When it's a few cents before things like the EIA numbers, just exit the position. That's why I'm pulling this off. Next key area down, though, is 71.51. Just trying to clean up the chart. Yes, this would qualify for a potential double. Long way. So we had the double top, which has come down, finished the targets. Double bottom now is potentially valid, but a substantial way off from triggering. And I'd actually go to conservative targets. We just don't know the lows in yet. But that would even come in front of the 200 and possibly return us to the low 90s. So it's just another bullish swing play. Natty gas still coming down towards the next key harmonic. Other than that, not much to talk about. Gold. Watching for that topping pattern, pulling back. That this is still no key levels are broken, still cycles at the top. Copper actually held up. Interesting enough, making the run back for the 200 again. So copper still holding up with the long-term play. The yen, Watching for a potential topping pattern rollover tomorrow. I'm actually hoping we get a little more rally overnight, because then we get the probabilities of a potential double in place. It's not a huge double, but it is something that could be potentially rolled forward. Keeping an eye on that. Euro, still the first target not yet hit on the double. But given non-farm payrolls tomorrow, this would be moved down. 106.53 is a closing stop basis. 106.80 is the walkaway stop basis. On a break lower, look at that final target coming right in at the 50-day. So still, dollar favors up, euro favors down. Pound is just along for the ride because there's no great pattern in here. Bitcoin, dead. Tesla, not much today. Very neutral day. Keeping an eye. I mean, this will trade in sync with non-farm payrolls, but daily cycles back at the top. So, and weekly cycles still at the bottom. So we could, is it theoretically possible if the market dumps to tomorrow to see another push lower to get daily cycles back at the bottom before a another potential bottoming play? Yes. What else? Is Apple, I know I got Netflix to look at too. Is Apple making a downward inverse head and shoulders from the 29th on the 15-minute? AAPK. A 15-minute. Is it making hold on. Let me get back to the comment. Hold on. Is Apple making a downward inverse head and shoulders from the 29th? On the 15-minute. This, oh no. Let me get to a bigger time frame. No. Yeah, the shoulder, I had this. This is too close to the head. There's no inverse head and shoulders. This is way too close to the head. So, no, that's not inverse head and shoulders. It could be traded nearly as a potential double, but it's horribly sloppy. Because this is extended far enough. This is within range of a double bottom. So that's the only pattern you have. You have a lot of chop in here. That's the only concern. But it is still technically valid, although slightly lower probability. So if you're trying to do an Apple play to the upside based off a strong market rally, this could be played. It would need to, on a close above 128.65, you then have 130.62, 131.57, 132.54. So that's your only potential bullish play in Apple. If it breaks down tomorrow, it'll pretty much be off the table, though. I'm just looking at the weekly cycles at the bottom again on Apple, daily cycles at the top and still rolling over. Also on a daily, it would at least possibly close into the daily rotation zone, but it is of the slightly lower variety probability double. Netflix, besides the only place still you have a gap to the upside left. So on any market rally, if you're already long, it'd be the gap fill play to the upside. What's interesting now, there's just not a lot. Again, so many of these things are And it has not closed above the 62.5 just yet, stalling out 2 days in a row with the close just below there. But if you did get